Good morning, traders. Today is the 6th of August, 2021. My name is Neville Hornsey, market analyst with YouTrading. And today I'll be talking about the euro versus the US dollar. Okay, starting with the YouTrading.com heat map, you can see that the euro at the moment is the weakest of all the currencies. The US dollar is the strongest. The yen is also pretty strong apart from the US dollar here. And that would normally sort of signify a risk off day. If you look to the Swissy, that's mixed. So we're not doing risk on, risk off today. If you look to the Aussie and the New Zealand dollar, they've been strong all week. But after the RBA Governor Lowe speech yesterday, the Aussie's coming off a little bit. All right, going to the active trader platform. If we look to the sentiment indicator shows that 79% of traders are bullish the euro versus the US dollar. So they're expecting to see the euro find support here and then rise. If we look to the monthly, I'll just go to a line chart to make it a bit easier to see. I've put a horizontal line on top of all the peaks of the month, labeled them in green. And then on the weekly, I've done it in red. So you can see that we've got some monthly support just below us. And then we've got this big cluster of resistance back up towards 1.22. Going to the daily chart, the current price actions closing below the 20, the 50, and the 200. So we are in a downtrend on the daily time frame. And if we go to the hourly, you can quite clearly see that we're below the 20, the 50, and the 200. So into sort of day trading is looking for shorts. We'll go back to the candle chart. I marked up old support, which got broke, retested, and then we had the continuation lower. So that's kind of what I'm looking for at the moment. I'm looking for a retest of old support and then a continuation lower. Early warning signal is if we basically start breaking above old support, and then that isn't resistance after all, and then it becomes support again, and then we start rising up. So that's kind of when I see that momentum changing early. But if we go to the US dollar index, the dollar index is now above the 20, the 50, and the 200 period moving average on the daily chart. It's taken out the highs of each day for the last 4 days. 2 days ago, we had the big bullish engulfing candle and then continuation higher today. So for me, the dollar looks like it wants to go back up, test this sort of breakdown from this rising channel. And if there is no resistance here, then we take out the liquidity, the stops above the swing high from July, and then aim for the March swing high. So dollar at the moment looking bullish, euro versus US dollar looking bearish. If we go to the weekly chart, I've marked up this double bottom here. This is where I think most of the liquidity is, and we could get a look below this sort of double bottom here, take out those stops, and then if we close back inside that range, then that's how we get back up to 1.22. Or we break down, take the liquidity, get back up, find that this support is now really strong resistance. The 200 period moving average is obviously acting as resistance as well at that point, and then we break down into this sort of balance area at 1.12. So that's long-term stuff. Coming back to the hourly, if we just look here, when we get down to the monthly sort of support line, that these sort of swing lows on the hourly have all been sort of tested quite a lot. So there's nothing new there to be found. So maybe with a really strong NFP number, so maybe above 1.6 million jobs today, we get below and take out these swing lows. If we were to get a really bad NFP, so sort of below 350K, then that's how we go higher. But expectations are for 870,000. So a number around there sort of gets us into this sort of 1.1780 level to 1.1760. We should also keep an eye on the US unemployment rate. So we want to see the 5.7% or lower. Previous reading was 5.9. We also want to see average earnings year on year rising. 3.8% is expected, but if we were to get above 4% year on year, then that'd be great for the US dollar. And that's how this euro sort of collapses. CPI inflation and PCE is obviously showing prices are getting more expensive. So if the US earnings are going up, then that would be good. And then if we look to the actual labor force participation rate, we want to see a number of 61.6% or higher. The dual mandate from the Fed is to get maximum employment. So a participation rate, towards 70% and above would be brilliant. Okay, so currently looking for euro to break down at resistance, take out some stops below 1.1750 if possible. If we were to get, like I say, a break higher, then maybe we go and test up towards this 1.19 later on today or early next week. All right, I hope that was useful, and I'll speak to you next week.